Welcome to this week's special presentation titled From Chaos to Clarity, a proven system for timing the market. My name is Todd Shaffer, Manager of Research for VectorVest. I'll be your presenter this evening. Have you ever felt like the market is just chaos? Like one day it's up, the next it's crashing, and the headlines only make it worse. What if I told you there's a way to cut through that noise and bring structure, order, clarity to your investing decisions? I'll show you how we do it with VectorVest. Let's move into the program. From the home page, I'm going to click on the Timing tab and then click on the Market Timing Graph button. This will open a Market Timing Graph, and I'm looking simply here at the price of the VectorVest composite over a 1-year time frame with daily candlesticks. The VectorVest composite is our broad market index. We call it the VVC, and that's the price action we're seeing on this chart. So after a year of trading, we're just about where we were a year ago. We're a little bit ahead, but as you know, the trip was a little bumpy, right? The VectorVest composite advanced to its peak here on the 25th of November before correcting almost 20% into the low on an intraday basis here the 7th, on a closing basis on the 8th of April. From there, we've had this nice bounce and clawed back about half of that prior move. So some big swings over this past year. And my second takeaway is, along with those big swings, a lot of volatility in not only that big swing, but each of these smaller swings still pretty big in amplitude on a historical basis. And then look at the chop, particularly at these market lows, where the market is just making big swings. Lots of movement without really progressing very well at all. All of that adds to our perception of chaos, and it's been building for quite some time. We can measure that volatility with a technical indicator called the average true range. I've set it to a daily look back period, but this is going to measure for us the range of price, including any gapping action on each and every day. And notice the alignment that we have of those volatile price movements, right? The volatility of just that price chop, where we had a daily spike that went as high as $5.07, where normal volatilities are down here around 30-40 cents. So a big spike, and of course, happening on multiple occasions here as the market experienced that churn. And finally, add to that market performance the daily news feed of the conflicting narratives, and the chaos seems like a pretty good diagnosis. So what's the VectorVest solution? Well, it all begins with assessing the market's direction. Market direction is the single most important thing every investor needs to know. And trading with that direction will have more impact on our trading success than any other single factor. That's because even the best stocks in the wrong market will likely go down if that broad market is falling. That's why our first rule is simple. Go with the flow. Buy rising stocks in rising markets, sell falling stocks in falling markets. Our market timing system is tasked with identifying the current flow of the market and generating clear signals we can use to navigate through the noise. Trying to invest without market timing is like sailing without a compass. As you're being buffeted by the wind and the waves, you might be busy, but you're not going anywhere productive, and you're not putting the probabilities of success in your favor. To understand how the broad market is performing, we need to have a broad market index, not just a thinner slice of, say, the S&P 500 or the Dow 30. The VectorVest composite, our VVC, is our broad market index that represents the average performance of all the stocks tracked by VectorVest. This composite index serves as a broad indicator of the overall market trend and is central to VectorVest market analysis and timing tools. That VectorVest composite forms the basis of our market timing signal system. So we use multiple rules-based systems, no gut hunches here, anybody's feelings. Each of these signals is designed for a different style of investor because they represent different sensitivities or time frames to recognize reversals in price action. Here I've listed those signals from fastest to slowest. So the fastest signal, the primary wave, followed by the green light buyer, the green light buyer RT kicker and kicker combo, the DEW, and confirmed calls. So those are the signals we're going to look at here today. But each one of them is designed with one purpose: keeping you on the right side of the trend for your particular time frame and temperament. Trend reversals are first signaled with short-term signals, and then the slower signals follow in succession. So know that these are all rules-based, no gut feel, no hunches. But I don't want to get bogged down in the rules. I want to overlay them on our timing graph and see how they might have helped us find clarity in that chaotic market we've been in over this past year. If you would like more information on the market timing system, in the program, if you go back to the timing tab and click on Market Timing Explained, Steve Chappell did a nice video here explaining the market timing signals and how they're derived. But for us, let's go back into the market timing graph and see how they would have helped us navigate this most recent time frame. So on our graph, let's take off the average true range indicator here. Take off my crosshairs as well. And let's zoom in a little bit to the 6-month time frame so we can see a little more clarity. So this is that same market peak, the high that we talked about back here at the end of November, and the ensuing correction right up into today's current market. On the bottom toolbar, we have the market timing signals, and we'll start with a confirmed call, which is our slowest market timing signal. If I click on that, you see it overlaid a red triangle, which is a confirmed down signal, and that we're currently in. So you see that signal generated shortly after the market top, which prepared us for that bearish market condition. And by remaining down, it's keeping the more conservative investors in safety, avoiding the correction and the associated volatility. And if you're a conservative investor, you're probably very happy to have sat out this chaotic period. Now, if you're just slightly more aggressive, you might look at that chart and say, yeah, but I had a couple opportunities where I had rallies that I would have liked to try to make some gains in. Well, then maybe you'd like something a little faster, our DEW market timing system. So you can see that the signal generated a couple rallies here. The first one didn't really play out. Right? Remember, this is rules-based, no conjecture here. So when the rules for the signal were met, it generated the up call. That didn't play out, rolled back to the downside. So we got back to the bear side here for the majority of that pullback. And then we got an up signal here again at the end of April. So faster than the confirmed down call gave us an opportunity to play some of these uptrends, but taking on a little more risk, trying to be a little faster. Notice that both of those signals avoided the volatility at the market lows. The next market timing signal is our green light buyer signal and its variants, the kicker and the kicker combo. But the green light buyer looks for a change in the price light and the color guard on our home page and is designed to be faster still than the DEW. And notice how we're encroaching now into some of that chop. We're getting closer to it because we're looking for a more sensitive signal that's going to trigger faster. Now this signal is a little different in that we have an up condition when we have a green light in the price column of the color guard, a neutral condition when we have a light other than green, and the red triangle is our confirmed down call. So kind of blending some of these signals, but ultimately it signals the uptrend sooner, and these signals tend to come in clusters as trends develop. So you can see we're getting a couple signals that were short-lived in those uptrends. But there are some things we can do in our portfolio to help us mitigate some of the risk of those early signals. This green light buyer signal is a signal that we've adopted in our successful investor coaching. And essentially the way we employ it is to buy stocks when we have green lights and we see the market following through. Stop buying when you stop getting green lights and just go with the flow as the market rallies. And so in this most recent rally, we started getting buying signals here on the 22nd of April. And finally, our fastest timing signal, the primary wave, many more signals and much quicker to change direction, particularly in oscillating markets. So when the market's moving sideways, you'll see these fire off in quick succession. So a little choppy as a trading signal, except for the most aggressive traders, but it is also the most sensitive signal and the first to pick up the change in direction. So if we think of these in terms of their progression, let's go to a 3-month graph. Coming off of what ultimately in hindsight was the low, the primary wave signaled first, then would come the green light buyer signal, then the DEW signal, and then finally the confirmed call, which we haven't gotten to yet. The power of these market timing signals is really realized when they're incorporated into a systematic trading approach. All trading plans specify 3 rules. Those rules are when to buy, which is a market timing question, what to buy. We suggest top VST stocks, stocks that have a good combination of fundamentals and technicals, and finally when to sell based on the stock's performance after you own it or the market timing. Also, the way we buy our stocks can help us mitigate risk and volatility. Step into the market, buying just a few stocks at a time, for instance. Follow proper position sizing so that if the stock stops out, it only represents a 1 to 2% loss to the portfolio. So let me show you how we do it in the Successful Investor Coaching. Let's close our graph and go back into the program, and I'll go to the Portfolios tab. This is a demonstration portfolio we use to teach the successful investor techniques to our coaching group in our coaching sessions. The portfolio value peaked here on February 4th after the market peaked. So after the market pulled back, remember it corrected almost 20%, but overall our portfolio has had a minimal pullback and is relatively stable. We currently have 8 open positions in the portfolio out of a possible 10. So we've been stepping in by only entering positions on green lights where we have follow through. We were in cash at the market low and got our first green light buyer signal on April 22nd. And so with follow through, we stepped into our first position on the 24th of April. And on each successive green light that had follow through, we added a couple positions at a time. Now, 6 out of the 8 had down days yesterday, but overall, the ROI is showing us that we have 5 winners, 3 losers. The 3 losers are down minimally, and so minimal drawdown to the portfolio. And remember, we're using stop losses, and we've sized the position correctly so that if they stop out, we won't suffer more than a 1 to 2% loss to the portfolio on each position. So in hindsight, yeah, we probably could have made more gains had we added positions more quickly, closer to the low. But that outcome was far from certain, right? And with the chaos that we've been experiencing in the markets, sleeping at night has a certain value. Additionally, if the market continues to climb from here, we'll continue to add positions until we get up to our max of 10. But we're well positioned to take advantage of that rally or that continuation higher with the positions that we have open in the portfolio. So if this methodology is of interest to you, the first place I'd have you look is right on the training tab. The Successful Investor Quick Start course will give you a quick overview of that system. Of course, it's free within the program. Our system is built on over 35 years of data, thousands of successful investors, and one unshakable belief. You can succeed if you follow the trend and trust the system. So if the market feels chaotic, confusing, random, it doesn't have to be. With this system, you can turn that chaos into clarity and sleep at night. Thanks for watching.